Good morning. Welcome to Solving Chaos Trading channel. On this video, we're going to cover a cover call using Visa, and I'm probably going to do a weekly, so that expires this Friday. So stay tuned and watch this episode. Welcome to my YouTube channel. This trading channel will be used to cover my options trading, stock market, and dividend investments. I will show you what I'm doing and explain the reason for what I'm doing. My end goal is to help more people learn that investing can be done by anyone. I believe ordinary, everyday folk can achieve extraordinary results without taking on the extra risk. Enjoy this episode. Alright, so let's see Visa. Here's the premiums. It's up 86 cents. Before we figure out if we want to do a 1 week or 2 week, let's check out the odds and the percentages. So what I was originally thinking is a 4 days expiration, October 9th. And I'm trying to decide if I want to do a 205 strike price or a 207 strike price. And the odds will tell me, is it worth the premium? So let's punch in some numbers. This looks like it's getting $47 at a 207.50. And if I punch in 20, so this would be a 207. Well, let's not play with that. Let's just test something out real quick. It's $46 premium. Your weekly rate of return 0.2, roughly a 9% per year on a cover call, which is really not bad. If I go with a higher risk, which is a 205, I can collect over $100. So that says 101, and that's a 20% rate of return. Now, I actually do not divide this by 52 weeks. I use a more conservative number. I use 40 weeks is what I do. But you can see it's a 0.5% rate of return, collecting $100. I haven't decided what I'm going to do, but let's go and do the trade. So let's do a call. This is E-Trade, so we're going to now switch this to sell to open. And I have to decide, do I want to sell it for a strike price of 205 or 207? And in a 205, you see how Visa's already up. It is very easy for Visa to finish this week above 205. And that's why the premium's at $100, because the chances of this happening are more likely. So what I may actually do is go with more of a conservative bet. Well, let me think about this. I actually have a 207 already open from the previous. I had another cover call open already, but let's do something different. Let's do a higher risk move today for 32%, and we'll collect 102. So let's do that. Let's put on a trade. We'll do a limit order, and we're gonna collect. Let's do 103. Preview. The impact, very little. So this is the proceed. We'll place the order. And it did not execute yet. It's still over here. That was a previous one from earlier today. So let's see, will that get executed? I think what I'm going to do is I need to lower the price. Let's do 101. And at 101 it got executed. You can see that right here. So I collected $100. And that's it. That's a cover call. Now, whether or not this is a smart move, we won't know until the end of the week. I have a couple options. So what I ended up doing was doing 101. I decided to go for a bigger rate of return for this week, but I have a higher chance of losing, which means I will probably end up rolling sometime later in the week. If the markets move down, I should be fine, and we'll end the week with the options expiring worthless. So that's all for today. Hope you enjoyed the video. If you like it, subscribe to the channel. Thanks. Bye.